Everyone, we are very pleased to having you here. We are just after lunch, so hopefully we can catch up and get up to speed. Unfortunately, Dr. Shehab Marzban was here in the morning with the Minister of Investment, but he had to excuse himself, so he's not available with us in this panel. So let's start right away, maybe with Khaled. Khaled has worked in many countries. He's Jordanian, if I'm not mistaken. He worked in Egypt before in microfinance. He worked in Jordan. He worked even in Afghanistan, Tora Bora, I think. So he got a chance to see a lot of business models, a lot of products. If you can give us a bit of an overview about microfinance in the region, and maybe zoom in what learning experience or kind of synergies you can see among Middle East.
Thank you very much, Ashraf. I'm very happy to be here. As you correctly said, the experience in the region in microfinance is really interesting, and there is a lot of lessons to be learned out of the 20+ years that I have spent doing this thing, microfinance. Let me start by saying that when I learned microfinance back in the late 90s, I learned it in Egypt. And I came here, I remember, to ABA in 1998, and this is where I saw microfinance. I met with Mohandes Nabil Shami, and we learned it firsthand. Now, looking at those, looking back at those days, I think with all the success that the microfinance industry had in Egypt, unfortunately, some of the other countries have, had managed to really scale up, differentiate, introduce a regulatory environment that is more supportive of the industry. And with that said, I know that there are several countries that started tens of years after Egypt, and they have developed and regulated the industry in a way that is extremely socially driven, while at the same time maintaining sustainability in the background. I would say that the nice thing about the variety of experiences I had is, the challenges you face with regulators all the time in terms of new products and new services, but more or less, the required reporting that in some of those cases focus on financial figures rather than the social figures. I think one of the most important factors or the most, one of the good opportunities that Egypt has right now, as well as the region in general, is orienting all our goals within the Social Development Goals 2030. And this is what we are doing in Bahrain, for example. Now there is a national policy that is being developed and put together. Microfinance is part of that strategy, but we are still looking at also the commercial banks, the NGOs, everybody to contribute to achieving these goals. I know that the regulation in Egypt is or let me put it this way: there is some room for improvement in the regulation, but I think taking into consideration what has happened since the first NGO started, what we see right now is a good step on the right track. And I encourage EFSA, I encourage the central bank to look deeply at the experiences in the region, more with focus on some of those countries that are nearby. Look at the regulation in Sudan that is very supportive of the industry. or the non-banking financial institutions. Look at the regulation in Syria. Look at the regulation in Bahrain. And we also can compare to some of those lousy regulations in some other countries. But yeah, I think it's not only about about savings, as we always repeat and say it's only savings, and the Central Bank of Egypt is not allowing us to mobilize savings. That's one thing, but I think there are lots of other areas that needs focus. Innovation and product development, equity in small, medium, and even micro enterprises is the hot topic right now in Bahrain, for example, and in Syria. We have introduced very interesting products to invest in the equity of those micro businesses even, and it's doing very well. There is a lot of room for innovation beyond only savings. There is insurance, there is equity, as I said, there is the blockchain now, and the cross-border lending. MFIs now in some of those countries, like in Bahrain, for example, we are looking at this model carefully right now. We're looking at a model where an MFI in Bahrain can lend to a borrower in Kenya, through blockchain and through the e-wallets. So there is a lot of room for innovation, and I think if the regulators do not catch up and look at what's going on across the globe and be able to adjust those regulatory environments for the MFIs, I think Egypt will continue to lag behind. It's not all about the number of borrowers or the number of clients that we serve. It's also about the quality of the services that we provide to those people. Thank you,
Khaled. So it seems like regulation is a very big point in your views, and I think we have Mr. Sharif Sami, but I would save the regulatory part now and maybe move first to Amr. So Amr, you have been in the microfinance business since, I think, maybe 2009. You founded a business, make it big, make an exit, and now you are chairing a new microfinance company. So if you can walk us through about the development of microfinance business in Egypt, and where we are today, and where we are heading for.
Thank you, Ashraf. It's a pleasure for me to be here today on the panel because I think we have an excellent representation. We have an international experience. We have my good colleague Walid, who's heading the biggest financial service platform for non-banking financial services, now encompassing 2 or 3 very capable companies. Mr. Sharif Sami, you have a long-standing experience, and he's helped the sector a lot during his stay with EFSA, FRA now. I've been actually working with microfinance, and it was a career shift for me since 1998. And my first experience was working with the NGOs, and I will not go back historically to how the microfinance environment looked like, because I think Khaled reflected on that, because he also worked with ABA in a similar period. But I think we need to reflect on the past 3 years, and I think the past 3 years have witnessed so many changes in the sector that are related to both the product offering in the market, the state of affairs right after the revolution, and how it affected many of the MFIs and financial service companies working in the field, but also very much so within the past 18 months to the changes that took place in allowing for products that would encompass a full-fledged financial service solution to the client, including microinsurance, including payment solutions that allows higher outreach, and the depth and breadth for the client to deal with the digital or digitalization of microcredit and financial services. And also what we see lately from the regulator, which started, I have to give the credit to Mr. Sharif Sami, because he's the one that led that revolution in the sector, although we always disagree that we still need savings at a later stage. But I think that the changes that took place lately allows companies like the company that I co-founded with some partners, which was sold at EFG at a later stage, and 6 companies in the market now, including the existing company which I co-founded with NI Capital, to provide a higher degree of financial inclusion. And I think this takes us to some of the change in thinking that we are witnessing from CBE. And I think that the rhetoric and the energy and momentum that the CBE is providing the microfinance industry in Egypt is extremely important, because I think with the interoperability that is taking place, with the involvement of the mobile providers, and also allowing banks to lend to non-banking financial institutions, namely microcredit companies, is definitely going to push this sector into a different area. We have, according to the latest number, a penetration of around 30% by the 3 main actors, banks, MFIs, including both NGOs and companies. And I think that with 70% room remaining for providing non-banking financial services to this group, and if we link that to the penetration of the bankable community in Egypt, which is around 15%, I think there is a huge room to have a financial inclusion solution for this low or productive income group. The digitalization or the fintech revolution that we keep reading about, including branchless banking, including delivery mechanisms that would allow for lower operational costs, that would allow for financial institutions with lower branching network to reach to the clients that they've never reached before, is something that is going to be extremely accelerated, in my opinion, within the next 24 months or a couple of years that we look ahead. I think Walid will reflect on companies' excellent initiatives like Value. I think companies that already have payment solutions like Fawri, B, Masari, and the likes are all exploring financial service solutions which would leverage their existing client base. And the mode that we worked as microfinance institutions in the past 3 years will definitely change, or the past 10 years, I have to say. Because now you can rely on a certain algorithm, now you can rely on analysis of big data, customer behavior, you can rely on the information base to produce products that are more suitable, more effective, that can come up with a proper risk assessment of the client in a faster processing mode. I think this will allow the private sector to move faster into this area, but we have to be cautious because you have to provide the proper practitioners, the management structures that would provide you with the proper institutional and managerial setup that would take you to a delivery mode that is non-conventional. Because back in the days when you used to identify the client in a very physical mode, exist in markets very close to the client, provide customer eccentricity, it was very easy to identify and have client acquisition, do the collection, go in the right direction when it comes to remedial effects with the client. But now with the digital solutions, you have to establish parallel mechanisms or remedial mechanisms that are non-conventional, which is very similar to what we did in Tanmeya, my previous company, I think 6 years ago, when we faced problems after the revolution. We had to think outside the box, come up with a non-orthodox collection solution, and we said at that stage, extraordinary times require extraordinary measures, and we completely thought in a different way, and we managed to be successful. I think that most of the actors that still exist in today's market exist because they followed unorthodox or non-traditional manners of doing this operational delivery mode. As a last point, when we speak today about the title, when we talk about non-banking financial services and the call for change, I think change is taking place. It's the speed that has to be looked at carefully. And I think that the strong financial institutions, the financial institutions that have the right financial setup, the right management, are the ones that are going to be successful in the coming period. I think a lot of the actors that are coming into the market today Some of them are assuming the position of, because we are big guns, we are just rich in finance, we can go ahead and provide financial service for low-income groups or for the underserved community. While if you look at institutions, the likes of EFG, Hermes, other investment banks, I think that having the right institutional setup with the right experience, in addition to the financial backing, is something that will take these institutions into a different position. So I think that the market, I always say 2018 or by early 2019, you'll see a different market when it comes to non-banking financial services in terms of mergers, acquisitions, greenfield companies, not necessarily by practitioners who are experienced in the area, but you will see a development in the market, and I think it will be challenging for all of us, because for some of us who are practitioners, we're seeing already a threat to the client, not necessarily to institutions like ourselves, but to the client. And most of the time, the client is not savvy enough to understand the difference between the products offered and the delivery mechanism. Thank you very much.
Thank you, Amr. So Walid, you left your role as a banker and you joined the group, more or less. And so I'm very interested if you can share your experience, because it happened recently, just maybe 2 years ago or something like this. And you joined EFG Finance, and then you were steering, developing a new business in consumer finance, new business model, new product, new delivery method, new way in customer acquisition. So I'm interested to learn about your move, how you feel about it today as well, and how do you see the market adopting new products and the new initiatives?
Okay, so thank you very much for the introduction. Yeah, I made the move actually on the 1st of August in 2016, and with the belief that the non-bank FIs are going to grow and grow enormously in the Egyptian market, given the low penetration of financial services and also the low penetration of banking services to different segments in the market. The motive was there, and actually EFG has been my client for the past 15 years, so I wasn't totally new for EFG Hermes team or staff. And I started after the acquisition of Tanweely, so I was lucky to work with Amr for a couple of months, and also after the establishment of the leasing arm. Now the leasing arm is scalable, is having a market share of 10%. Tanweely is the largest non-bank financial lender into the microfinance business. And our aim was to provide additional services and additional products to enable us replicate the bank asset side. So when you look at EFG Hermes Finance, you see that we have launched recently our factoring company, and the aim of that is to provide a corporate banking, fully fledged corporate banking services to our clients. This would include medium-term and long-term loans, supply chain financing via factoring, and working capital finance. Also, we have launched Value, which is the first app that provides instant approval to customers. It was actually a very high risk that we in EFG decided to assume, because it's a change to how customers had access to credit in the past. We wanted to be fast, secure, easy to use, and this required a lot of infrastructure to be built, a lot of technology to be deployed. And the good thing that the results were amazing. It even surpassed our initial budgets, and customers are adopting it on very fast pace. The solution is based on data analytics, on algorithms, on analysis of various points of data, and measuring risk in a different way. Now in the market, there is a lot in the region, and especially in Eastern Europe, you will see a lot of what they call alternative lending solutions. And those alternative lending solutions are not using the traditional ways of underwriting customers. We also wanted to save customers time, so from the app download until final approval, at inception, it took us 25 minutes. Now with our latest release, it would take you 7 to 8 minutes to get an initial approval on our app, filling in 2 screens only. We are looking again to complement our products by including payments, insurance, and mortgage. And by this time, we'll be able to provide all the services that a commercial bank can provide to its customers, with one exception that we cannot acquire deposits from our customers. And we hope, at least for our microfinance business, to see some micro-saving initiatives coming from Central Bank and FRA, because I believe this was the way those businesses boomed in other areas and other regions. We've seen a lot of newcomers to the non-bank FI, and this is a very good trend, because there is a lot of opportunities in this area, and consolidation of those services under one entity would help to standardize the products, would help to use a lot of synergies, and will make those entities very efficient in the way they provide proposals to the customer. And we are trying to consolidate as much as we can a lot of the services that we do, a lot of our support functions. We are looking at standardizing and consolidating our product team, and also our risk team and our finance team, which provide us with a lot of efficiencies when we target the market, and we make sure that we provide the best turnaround time and the best services that we can. Thank you.
Thank you, Walid. We move to Mr. Sharif Sami, and first of all, Mr. Sharif Sami is a big supporter for CFA Egypt, so we are very pleased and honored to have you here with us today. And given your background in leading financial regulation in Egypt, and now you are observing and still involved, of course, but what are your thoughts about where we are and how we can fast forward any needs for reforms, how Egypt could be a destination for investments and for growth for non-banking financial services? I envy to a way Pakistan. I see mobile operator from Norwegian mobile operator investing over there. I see Alibaba as a financial arm of Alibaba getting into Ta'mir Bank in Pakistan. How do you think what we need to do differently, or maybe a bit differently than what we are doing?
Thank you very much. I don't just observe, I'm involved in a number of non-banking finance. We would have succeeded.
But observe as well. This is what I mean, that you are not just
when we change the title
here,
I hate it when we call the services we're discussing non-banking financial services. I think, and with the CFA, we should come up with a smarter name, because we should stop comparing it to banking. It has merits on its own. I'd like to also mention, you started saying we should go and look at some other countries, Syria and Jordan. I would like to challenge you on that. I think they should come and look at our regulations, whether it's insurance, payments, and mobile, especially in the very short number of years. You measure always success and efficiency with what happens in a short time. These are just quick comments on what was said. Back to your question, I think I would like to tell you a short story. I just came this morning from Asyut in Upper Egypt, where I spent yesterday. And when you go to rural Egypt, and 3 weeks ago I was in Mansoura and Simbilawain, you really see the impact of non-banking financial services. It's very different from Cairo. I tell you, the way to go for small enterprises, for even mid-size, for those who do not get into the formal financial sector, it's non-banking financial services. Bankers in the room know how expensive it is to establish a branch, all the security requirements, even payroll of bank staff is much higher than non-banking on average. So it is definitely, for a country like Egypt and an emerging market, it's very important. I know deposits were mentioned. I have my opinion on that. But I think insurance, unit-linked insurance, is a very useful tool. It's regulated for helping people to save. I look at durable goods, and I look at buying machinery and so on, leasing. We have a law in Parliament now being discussed to introduce micro-leasing, which I believe will be an excellent addition to the sector. Maybe we focused more on microfinance in the panel. Just want to tell you that factoring is doubling in size. Mortgage as well, the percentage of mortgage going to non-residential is increasing, which is very important for logistics, for warehouses, office space. So the whole portfolio of products is in good shape. Also, there is a very strong support from the central bank because the initiatives they're adopting, to encourage SME lending, they're extending the same benefits to leasing and other financial products, whereby you can benefit from reduced interest rate and so on. But even without interest rate, you'll be surprised when you go to rural Egypt, they're not very sensitive to interest rate. They have other priorities, getting the money in the first place. Some of you might have read it, but in last week's Wall Street Journal, there was a very interesting article. It was stating that US bank lending to what we call non-banking financial institutions increased sixfold between 2010 and the end of 2017. Sixfold, and that's the US. Now, the justification was there is a large segment of clients, small clients, which banks do not know how to handle their risks, but the leasing and the factoring and the mortgage companies are closer to the clients and they know, how to handle them. And I think this is an important lesson for us, that lots of the banks in Egypt that would like exposure to that sector would probably do it via leasing, mortgage, factoring, and so on. So as not to take too much time, of course, there is an evolution of regulations. I'm very happy that the Parliament last month, within the capital market law changes, they introduced short-term bonds, which you call commercial papers, and these will be very useful to some of the activities represented in that panel. Also, there is talk to introduce new funds, maybe specialized in microfinance, potentially leasing as well. I think this is important. And as was stated by my colleagues, as insurance develops, I think insurance would be a main component of including more people into the system, plus would give more revenue streams to branches of other non-banking financial in the market. Thank you very much.
Thank you, Mr. Sharif. So it seems like from what we are hearing that a lot of companies are in process of get launched, maybe merger and acquisition, maybe some foreign players are getting into the market. So do you see in your experience some challenges in hiring good calibers, whether in the executive level, middle management? We are saying we are in Egypt, big talent pool, big pool of talent, but in practice, how do you see it and how do you view it and how you think we can have better calibers? So maybe Walid first.
Okay, I believe there is a great improvement in the calibers that are currently graduating from their undergrad. I've witnessed a major change in the past 2 years in how those calibers are being educated. Your main competition now on those calibers is not only the banks, but actually a lot of them are having their own startups. So basically, there is a wave of entrepreneurship in the country. We have witnessed this because we co-manage a fund with the MEIC, which is under Egypt Ventures. It's EFG FinTech Accelerator. And we have witnessed a lot of good calibers, even if they are not the founders of the startups, they are working for their colleagues on that level. This is for the undergrad. So the undergrad, yes, there is a huge competition, but the overall quality of the calibers graduating now is far better than
executive level.
5-6 years. Okay, on the executive level, I believe it's going for the coming period of time. Our major headhunts would be from commercial banks, to be very frank about it, because basically there is no enough calibers on the executive level, given the number of companies that are in place and well established are there, and it's very hard to headhunt from any of the current companies. But definitely 5-6 years down the road, there will be a lot of depth in this level of management, and the number of companies is going to increase dramatically, and accordingly, you will not face an issue. We were lucky enough in EFG that we acquired the biggest microfinance lender. So it was already had its own management and its own founding team. Our leasing company, we were very early in the market, so we did not face a lot of competition when hiring our directors. And value, we started with mid-level management, and we were able to get the best of the middle-level management in banking sector, retail banking sector, to go very bold on establishing a new company, a new concept, and they assumed the risk. So there was no major issue at that level too.
So Khaled, Mr. Sharif.
Quick statement. I urge CFA Egypt to establish regional hubs for training. My visits in Upper Egypt and Delta tells me lots of very promising potentials. Just train them and you will really bridge the supply gap, especially that non-banking finance needs to be present locally. It's not a head office in Cairo. It's very difficult to move people from Cairo to go to Asyut or Suhag. So please, CFA Egypt, train them there and you'll get them there. Thank you.
Okay, we have the management team of CFA Egypt here, and lucky enough have the management team of CFA Institute as well. So maybe we can discuss with you how we can work together in having something like this. Khaled, you was
very interesting. I would say that what Mr. Sharif Sami referred to is something that we do within Ag Fund. I'm sorry. Just a quick introduction about the organization that I represent. Ebdaa Bank for Microfinance is one of 9 banks in the region that are all partially owned by the Arab Gulf Program for Development, Ag Fund of Saudi Arabia. Because we, at an early stage, we recognize that there is a challenge in terms of building capacity and having enough capacity to really grow and serve as many people as possible. And that's why we started our own academy under the Arab Open University, which also is owned by Ag Fund across the region, where we now have a microfinance diploma, and we will soon be introducing a microfinance financial inclusion, a bachelor's degree in financial inclusion. Beside that, we have developed our own program to build the next generation of executives. Because the network is growing, we have 3 more operations, hopefully in the Middle East, and 14 more banks to be opened in Africa. And with that, you need to really continue to build the capacity and bring up the next generation of leaders that will take over those institutions, banks out of our own institutions, whether in Bahrain or in Jordan or in Syria and Palestine, in one of those 9 countries that we operate.
Yeah, thank you. So we have already covered maybe some of your questions over Slido, and maybe my final question would be around, we are maybe Egyptians or Middle East are perceived not to celebrate difficult moments, failures, all of this stuff. So if any of you would like to share with the audience difficult situation, failure, lessons that learned during the experience in non-banking financial institution?
You're all looking at
I think Amr would be the best one to answer this question.
So Amr would save me, hopefully.
Yeah, I think that one of it, I would call it a temporary failure. And I think when we started our business in 2009, there was no law regulating microfinance in Egypt. And I have to give credit to Mr. Ahmed Bardai for coming up with the concept of an arbitrage solution for a non-banking financial institution, which we actually copied, but we had a bigger growth model, we had a bigger outreach, we had more aggressive plans for growth, and I think this worked well until the revolution. Until 2011, when basically there was a failure of the legal system, failure of the security situation, and I think that this is one sector or one area for non-banking financial institutions where you actually rely on the sovereign stability and rely on the rule of the law and rely on the intertwined relationships between strong families on the regional level and local level, the police station, and the strength of your institution to establish local presence. And I think this failed across the board in Egypt after the revolution in 2011, and it was then where we saw risk going up from 3% to 25%, portfolio size went down 30%, some of the branches were attacked, we could not assume the control we had over the business, and we almost went bankrupt. And then we had to do a capital increase and establish new mechanisms for collection that I alluded to earlier, and think totally outside the box in terms of relying on our own thinking and exerting higher operational control into the business, not thinking outside the box and expanding further, but actually trying to establish relationships with different financial institutions. And the central bank, I have to say, at that stage was hand in hand with us, because we were having a portfolio with one of the Egyptian banks that was around 250 million at that stage, which was a direct threat to that bank. If we failed, the bank will fail, a failure worth 250 million. And I think that the lessons learned at that stage was to think outside the box, to rely on non-conventional collection methods, to assume responsibility within the institution of how to remedy the sovereign threat that we're facing through partially technological solution, but also in collection, but also to rely on third parties. And we unfortunately had to rely on collection companies at that stage, and luckily we were three managers at that stage in the company, and we all assumed several operational responsibilities. We lost our CFO, he went to Saudi Arabia at that stage. Our CRO decided to go back to the US, so I wore two hats at the same time, co-CEO, CFO, and CRO. My colleague, Amr, at that stage wore several hats. Our third colleague, who divested in the interim stage, had to assume responsibility over the branches because we were losing staff also. But then things started getting better, and I would say that assuming control, higher control measures, relying on your major shareholder, which was Citadel Capital at that stage, in terms of a capital increase, because we basically had no funds to do a capital increase at that stage to save the company, worked well for us. I always celebrate this failure. Yani answering Ashraf on that, I think that what we've learned in that period, what we have all learned as financial institutions, including the regulator at that period, being CBE at that stage, not FRA, as FRA came at a later stage, I think this provided an excellent learning curve for any problem that may come in the future, because basically the checklist was there. Things that could go wrong went all wrong at the same stage.
Thank you, Amr. I really appreciate it. So to conclude, maybe to have 1 minute final word or remark from each of you, maybe we can start with Mr. Sharif.
I'll pick up on the comments. We started technology, maybe not blockchain at the current stage for micro, but maybe for leasing, definitely, and mortgage. No, I think technology and payment systems are really the name of the game for inclusion, for a cashless society. Plenty of opportunities. I know a lot of entrepreneurs are currently involved in payment-related projects. Banks are doing it. Even industrialists in Egypt, CEOs of very large companies manufacturing, they have a soft spot for payment and they're investing their own money. So I think we are going to witness a boom in that field. I hope that laws and regulations catch up. We are in dire need for a law to regulate payment service providers, the security of and integrity of the data as well, because today it is left without, I mean, nobody's in charge, and I think the risks, the reputational risks even are high. So I think if the central bank pushes on that front, especially if that we have now a National Payments Council, it will be very important, and that will need to be supported by what you call a regulatory sandbox, whereby we have very loose regulation for a startup between the FRA, central bank, and the NTRA, which is the national telecom. Because today, you move from one problem to the other, and until you get approval from the three, you forgot what you started. So I think they need to be in a room, in a committee, and then give you some freedom to act for a limited number of clients, maybe 200 or 300 for a number of months. Bahrain initiated a sort of sandbox regulatory regime. The Securities and Commodities Authority in Abu Dhabi started one, and I think with a flexible regulation on payment, we will move several steps ahead. Thank you.
Basically, the most important thing that, given that there is an increase in the number of players in different sectors under the NBFIs, I would really recommend that everyone coming into the market to come either with a new product or a new approach to serve the client. We don't want to see one company and then we see other ends. We need to see always a new one coming into the market with innovative ideas, technology-based solution, more efficient products, and accordingly this is going to add a lot of value to the market. But having the same leasing company, the same microfinance company, the same consumer finance company would be a major issue. In EFG, we try to, in our new ventures, that we give them, provide the market and our clients with structures that are completely different than our competition, with the aim of competing on customer satisfaction, on ease of use and similar things. So the major recommendation would be coming in with innovative solutions and coming in with different products, and always hiring a younger team that will help to come with fresh minds, fresh ideas. And finally, I would recommend that everyone try to sponsor a small fintech accelerator, a small startup accelerator, in order to be ahead of the curve, understanding what's happening and ready for any disruption in the future.
Yeah, I totally agree with Mr. Sharif Sami and with Walid on the assessment on the regulatory side, and in terms of the product diversification, responding to the client's need, and having a new innovative approach to delivery of financial services. On my side, I think that with the evolution that's taking place and with the introduction of different actors coming into the market from a financial service delivery background or from another discipline, I think that ones have to be very careful about the type of products they provide to the client and the degree of responsibility that they exert, especially for low-income clients, in terms of overburdening the client. And I think that there has been, I've been seeing, and several people seeing in the market, that there has been a rush to provide credit to clients, especially in high inflationary environments, that is combining both microcredit for institutional basis or for an enterprise or activity, and also partially for a consumer base or a consumer need base, especially for low-income group. And I think that within the next period, new institutions, especially not coming from a financial service background, may tap on that weakness in the market or that demand or void in the market to burden clients with additional cash. On the other hand, I think that in respect to the client's need, one's data is going to be very precious. And I think that if we see the telcos in the market with the immense amount of data that they have, and other companies, maybe 7-8 years ago, most of the financial service providers were running after microcredit companies and MFIs for the data that they have, ones that have 100,000 clients, 120,000 clients. Nowadays, it's becoming a little bit different. Now, the big data owners and the evolution that has taken place in countries like Kenya or Sub-Saharan Africa and Pakistan when it came to telcos acquiring financial service providers is something that I think we're going to be seeing in Egypt, or at least alignment between telcos and financial service providers. And this will be probably an evolution in the market. Thank you.
Thank you. I would say that Egypt is nominated to really be a champion in advancing the non-banking financial industry into the next level. As Mr. Sharif said, technology is the solution now. Cross-border financing for micro and SME, micro businesses and SMEs is going to happen. Bahrain just licensed the first digital bank, completely digital bank, no branches, nothing. And we hope that this is going to be witnessed in Egypt as well. I think, if Egypt adopts technologies like the blockchain, as I said, the mega loop of Microsoft, and be able to adapt those technologies into the non-banking financial industry, Egypt will easily, with the heritage and experience in the market, can easily lead and introduce new technologies that would not only serve the entrepreneurs of Egypt alone, but also across the globe. Again, this is the country where most of us learned microfinance in the first place, and I think this is where a big jump in this in innovation and technology and innovation and product development will influence and impact the whole world. Thanks.
Thank you. So the opportunity is there, but a lot of things need to be done. And finally, I would like to thank Mr. Sharif, Walid, Amr, Khaled. It was a pleasure. Thank you. Thank you, everyone.
Thank you. We'll be breaking for a short coffee for about 15 minutes. So we'll see you back in here in about 15 minutes. Time for our final panel. Thank you.
My life is brilliant, my love is pure. I saw an angel, of that I'm sure. She smiled me on the subway, she was with another man. But I won't lose no sleep on that, 'cause I've got a plan. You're beautiful, you're beautiful, you're beautiful, it's true. I saw your face in a crowded place, and I don't know what to do, 'cause I'll never be with you. Yes, she caught my eye as we walked on by. She could see from my face that I was flying high, and I don't think that I see her again. But we shared a